what's up, guys? Hope everyone's doing good. I'm going to be doing just a quick recap before I take tomorrow off. Congratulations on the week, man. I mean, we were right, dude. We were right. We were right. We were right. This whole markup was essentially being distributed into, I believe. Whether it was or it wasn't, right, the distribution did happen, and so it played out how we thought. Let's take a look at some charts here real quick. Let's actually, okay, we'll flip this over here. You guys can still see that, right? Okay, cool. So, big short idea this week was like NVIDIA, if you guys didn't know. I was essentially, if we replay this, right, I was expecting a lower high, right? So this is Wednesday, Friday. Obviously, we had a short week last week. So Monday and Tuesday, we were just looking for shorts on this. And the first initial day, right, we were kind of expecting the seller's ask right here to be a key inflection point, right? Seller's ask is simply the close of this big, large candle here that will obviously engulf the previous day. It was probably the largest, range-bound candle that we had. And obviously, we retested it. We sold down lower, so that's a key confluence there. And obviously, we pushed up on Monday. We retested that. This is the first day that we went short, guys. The first day. This is where I made about, I don't know how much I made on this one. This is the first. So I think I had Intel, and then I had NVIDIA, and those two were diverging from each other. So this ended up being a pretty big win just on this initial day here. And if you guys didn't understand what I was looking at, take a look at volume here, right, after the initial markdown. This is always a footprint candle, right? Kind of the big volume here after the initial markup, right? You guys got to start paying attention to this shit, dude. Look at the volume here for this markup, and then you have your true indication of what's happening here. Volume kicks up on the sell, right, and then it starts to consolidate on low volume again. Now it's pushing up and retesting or kind of pushing towards the high here on decreased volume. Mind should naturally think, hey, lower a high, lower a high. There's not enough volume here, but I kept seeing people trying to long this thing. I saw people on Twitter trying to long it. Shout out to Rordry, brother. I love you, dude. I kind of forgot about this, but it's always important to check your indices and kind of check for NWOGs or new weekly opening gaps, especially on data heavy weeks, dude. If we end up gapping up on Monday or Tuesday, or I'm sorry, Monday for the new week, right, quote unquote new week opening gap, you can expect that data will be a distribution. If we gap down, you can expect that data to kind of be an accumulation and a markup and to fill that gap, right? So we ended up opening up on Monday here, and we just progressively climbed up on low volume. CPI comes out, and what do? We pull back, and we fill the new weekly opening gap. From here, they can redistribute it, which we all should know, or they can reaccumulate and then mark back up for the highs, right? This is just a simple schematic, a simple system that I teach in here. It's nothing new. It's nothing crazy. This is simple Wyckoff and volume price analysis and just understanding how buyers treat this. This is an auction, guys. Highest seller, lowest bidder, right? Oh my God, I said that backwards. Whoever's putting the most money at a buyer or seller, right? That's kind of where the market goes. It gravitates towards these levels. So, simply put, if we go back to NVIDIA now, right, we were kind of looking for shorts into the lower high, just kind of risking this high here. What? What's that, guys? All right, guys, sorry, I thought my girlfriend was in trouble. We're good, though. But yeah, we were basically looking for a lower high here. You guys can tell by the volume here that we were pretty much flattening out, obviously exhausting into this level and failing to make a new high. CPI would have needed to have come in, obviously, lower than expected, but also have a very, very large outsized move in pre-market. Now, if we take a look, guys, do you think this move here is outsized? Technically, the high of, or I guess we can just kind of round this to the high of day here. If you don't know, I usually make this purple, so if we just make this purple here, was this a big, big extended move from the previous day high, right? Let alone the close, but if we just use previous day high, this move's pretty low, right? I mean, it's pretty weak. We opened up technically, what? 75 cents away from the high, so not an impressive move. And then as we started to fade underneath this is when I started to look short. And obviously I alerted the short here as we kind of closed with this, I don't even know what to call this, right? We ended up kind of breaking underneath pre-market low. We pushed back up and we closed right around here, which is technically near the close, right? So I ended up going short on this, and I kind of thought, hey, this is our opportunity to then risk the previous day high, right, which is there. Get in at the previous day high, kind of around that range, risk the 15-minute orb high, and then I was targeting, I should have gone a lot deeper, guys. I'm going to be completely honest. I should have gone a lot deeper with this. My target this whole time was 124.71, but dude, if we take a look at that RR, that would have been a 9.7 R. I should have held, even if I took 3 contracts. This is what I try to emphasize to a lot of you guys. Be okay losing this. And like, that's not financial advice. That's nothing like that. But if you're going to make it in trading, you have to understand risk reward and get rid of that fear aspect. Get rid of the fear aspect. If there is a trade that presents itself and you're going to get 9-to-1 risk reward, you have to take it. Even if it's just like 2 contracts, 1 contract, just feel the trade out, especially if everything kind of aligns with what your theory is. It's there, right? So for this trade, I had about 27 contracts. As we started to fade down, obviously we kept pushing and pushing and pushing. We got down to this point here, and you guys can kind of see it on the daily chart where we had this previous day high, which is Monday's high. Always think in retrospect too, I guess, like look at how the weekly chart is formed out. Monday's high and low is always going to be important. That's always the beginning of the week. So 130.78 was a very, very big confluence for me. So as we started to break down, right, we clearly saw somewhat of a bounce in this general range between Tuesday's high and then Wednesday's low. Was it significant to me? No, not really, right? I kind of understood the scenario that we were in. You guys can even see it kind of just bounced off of a random level here. But I mean, the big spot for me was Monday's high. Clearly, we pushed down, we retested that spot, and we had a pretty big bounce here, right? And this is where I trimmed a majority of my position. And then from here, you guys know me, I really don't use EMAs, but this is always helpful, especially if you're kind of struggling to ride trends out. Just use your EMAs, and especially if you have a fucking 9-to-1 RR, like, dude, just use your EMAs, ride it out, be okay losing, like I said. Especially if you can get something like that. But I pointed this out multiple times. I posted this in the chart. What do we have here that's forming out against the 9 and the 21 on the 5? Lower high, right? What do we have again? Lower high. That's coming off of our level, retesting it on a lower high. Breaks down again. We get a lower low. We retest again. What do we have? Lower high, right? And then we have a lower low here. Lower high. What do we have in extended hours? Lower low, right? So this is a very, very easy thing to kind of form out and kind of just play. If you guys knew me, I pretty much trimmed as we broke down here. We retested this spot and it came down. I was completely out of this trade by like basically 127. The significance of 127, if we can just clear this out really quickly, was simply Monday's low, right? Very, very simple. My thought process and the way I trade is so replicable, guys. You guys can do this over and over and over and over and over. That's how your trading system has to be. And dude, I just want to emphasize, guys, today was so difficult. Today was so difficult. You know why? You had IWM gapping up from the close here to the open about 2.29%. The chart looked good. I could have chased long there. UPST, albeit I do have shares, so I have common, so I'm not like fizzling at the mouth to get in on this trade. But this ended up having a huge move. If we take a look, Tesla even this morning, guys, Tesla almost tempted me. Tesla had a good open, right? We ended up kind of breaking that 265 level again. We ended up cracking it by about $5, 2.2%, right? I was like, fuck, dude, this thing's going to go to the gap. I fucked up. You got to get out of that mindset that you missed out on stuff and start chasing stuff because you missed out. Because once again, we tie this back to the daily chart, guys. This thing did not look good. This thing obviously broke out on high volume, but once volume stays high throughout a breakout and you're seeing breakaway gaps like here, right, between this day and this day, this day and this day, you start progressively making your way up with these long upper wicks and the volume is still incredibly high. That is not good. That's signs that there's sellers that are masking their sells within that tape into retail buying the breakout. We're also coming into a major weekly swing high, right? And baiting this gap. What do you think people, and I always talk about this, guys, gaps are bait, dude, for a lot of the opposing side, right? So a lot of this is based on retail counterparty being exit liquidity for the bigger money. We end up hitting a weekly swing high. We're obviously exhausted on, I didn't even look at RSI, but I can tell RSI was probably like 85 plus. But you end up pushing into this weekly swing high. People are probably like, oh, this is a guarantee. I can probably scalp out, above 265. The extra $24. That sounds crazy, by the way. But the extra $24 or 10% to get to 290, right, and fill this gap here. It's not how it works, guys. Gaps are bait. We always talk about that. That's why gap traps are so prominent. That's why when people are trying to trade gaps, obviously, like let's say they're trying to go short into a gap, usually it'll close into close above that gap, bait everybody that shorts into it, and then you'll have a squeeze higher, and then it'll sell, right? Same way for this. This will be a gap trap. Even though we didn't get close to it, it's still the same premise, right? So that's why I was looking for shorts off 265. It did go a little bit above my stop loss yesterday, which was obviously here on Wednesday. I only closed that. I was only down about 9%. The only reason I closed that was because I was down 900 bucks. I didn't want to have too short exposures with my SPY lottos that I took for about $500 and then like a $1,400 position on Tesla. I just didn't want to do it, right? Especially with something as speculative as CPI. But dude, this thing couldn't have gone more perfectly. Yeah, it is what it is, right? I'm not too concerned about it, but the whole point, right, is just kind of understanding structure of chart and looking at volume, and it is okay. Like, dude, people will give me shit in our chat, and dude, I love you guys. I love you guys. I love you guys. But I use it as fuel, right? Because a lot of the times, I'm not saying that you're wrong or that retail's wrong, but I like to think outside the box, and I like to look at volume, and I like to look at price, and a lot of the times they don't align. And when they don't align, you don't need to be trading it, or you can sit back, dude. You can sit back. A lot of trading you don't have to be involved in, and that's the thing I always like emphasize on Twitter is you always feel like you have to have involvement with the market. You only need a couple setups every couple months or every couple weeks, every even like 3 or 4 or 2 or 3 a year, and you'll be fine. And there's a lot of pressure on you guys and a lot of pressure on me to take trades every single day, and that's not the reality. There's only a couple setups that you need. So you got to be okay letting things get away from you, letting things do stuff, especially if it doesn't make sense. NVIDIA didn't make sense, right? And then we finally got to a point where it made sense. We ended up having a fake breakout over this high here, very, very clear. If we go to the hourly, you guys will see this will probably kind of, yeah, I mean, didn't even close above, right? So in pre-market it did, but pretty much kind of melted down right off the open. But for the most part, CPI came in cool, just a little bit cooler. They used their dark pool prints to kind of pull price down because it is an auction, right? And they went to their heavy level or heavy bidded levels. They sold the highs, and this thing started to mark down. So we ended up going short on this break underneath 135. Once again, I was trimming along the way. 130.78 was the major level. I ended up closing more at 127.04. Should I have held? Yeah, I probably should have held like 4 runners. I could have made an extra $400 if this comes down to 124.71. It is what it is. Other thing, right? We took SPY today. SPY was another great one. And you guys can see I have everything marked out here, right? So similar structure here where we ended up having, I went short pretty much at previous day high, right? If you guys remember, let's take a look here. Let's get rid of that. Drink break real quick while I chart this. So the previous day, right, I kind of just took because I'm long, obviously, Intel, I'm long Shop, a decent amount. I'm long Roku. But this ended up kind of being like a short hedge, right? And like in case the market ended up melting down, I would have a good, 10 contracts isn't a baby size position, but it's like not also a big size position. But if it would have gone to where I thought it could have gone, which is down here to 555.82, which is a strong dark pool bidder. Obviously, it's the beginning of the week, or sorry, Wednesday's low. I thought this thing could have like a pretty good return, which would have been around 300%. So I thought it was worth putting $500 just to kind of hedge my current longs, and then at the end of the day, I would have bought more on my my calls for my swings. But these ended up opening up pretty much down 35 to 40% if I'm not wrong, just because of IV, right? So IV, everything is they're pricing in volatility because it is CPI, and if you don't have that volatility, right, and it kind of moves outside of the implied move, your contracts will kind of get crushed or deteriorated because of that move isn't as big as it was thought out to be, right? So these ended up opening, even though it was close to where I ended up taking the position, which is right here at this white line, it was down like 45, 30, I don't know, 38% or something like that. So I closed right away. But take a look. Once again, same thing as NVIDIA. We ended up kind of pushing up a little bit, and then we broke under not only the previous day, but we pushed underneath the previous close. And as soon as we ended up breaking underneath this close, I knew what was happening, right? It kind of clicked with me too at the time. Like, I mean, Wordry kind of brought it up, but like we had a NWOG down below, right? SPY was the same exact thing. If we kind of take a look at SPY, but it was hidden, right, down to 555.82, which is also coincides with that dark pull print. So it all kind of clicked with me. So if we go back to the 15-minute here, or we can even go 5 just to make it a little bit tighter, you guys can see, right, we kind of had this push up. We had a clear trend line as well, which I don't really concern myself with, but each higher high is becoming what? Smaller and smaller, right? And then each high is also on decreased volume. So as we push to make a new higher high here, we end up taking a look, right, that this high had volume behind it, but it didn't have much of a result. Next candle, it starts to sell, right? And then as you start to break underneath that close, you start to see volume really ramp up, right? Volume starts to really kick in. So this is when I actually went short and we started to melt down. You know me, I don't really take stuff unless I end up getting a retest. So this is why I had my fibs drawn, which you guys saw that I ended up deleting not too long ago, probably like 45 seconds ago. But I was looking for something like this, right? A breakdown, push up, retest the previous day low, or retest the previous day high. Sorry, I'm misspeaking. Retest the current day low or the previous day high, right? Somewhere in this range, and then obviously start to break down lower high, right? And then make our way progressively down towards this 555.82 spot. I got kind of lucky. You guys saw my ads. I posted all my fills. I had about 100 and I think I had initially 85 to 100 contracts on this initial breakdown, and then it pushed up, and right here is where I added another 50 contracts, and then we kept making lows, right? This is where, dude, this is why I love being a bear sometimes, guys. It's so easy, it's so fun. You can literally feel the fear, and you can feel the volatility increase, because obviously you're having both sides work in tandem together. You have sellers obviously pushing price down, and then you have bulls that are capitulating. So it's so fun to be a bear, because you have both sides that are increasing the vol on this. But we got the lower high here, and then I ended up obviously getting in with an extra 50 contracts, so I had about 150 cons total. I ended up getting it at 3.4. I added, so obviously my average was right here, right? So I ended up averaging up. So my cost basis went from 3.4 to about 3.8, but this kept making lows and lows. And unfortunately, I closed right around here, right? Because I was also taking NVIDIA, right? So once this ended up kind of melting down, I didn't want to have like two short exposures going into previous supports, which the previous support, I don't know what that noise was. The previous day low was right here, right? So I kind of just took profits leading into that level, and it worked out really well, right? I mean, we kind of had a bounce off of this spot, and then we progressively made higher lows, and then obviously now we're kind of hovering in this range. But that's pretty much it. It wasn't anything crazy today, guys. It wasn't anything crazy. I want to talk about like this, the NWOG, like it's okay to be suspicious. Dude, like, and like, I hate people that are talking about like I saw TTD floating around so much on Twitter. These are not good charts, guys. These are not good charts. Dude, like, this is a terrible fucking chart. Microsoft, I mean, this is okay, but like, this is a terrible fucking chart. Like, and you guys, I'm gonna scream to the end of time. Terrible fucking chart. You don't want to be trading breakouts, dude. You don't want to be doing it. I'm going to scream from the rooftops, man. You want to find charts with clear pivots, clear lower highs, clear higher lows, dude, and you want to have an edge. Edge comes from fucking structure, and it comes from fucking volume, dude. And it's really that simple. I don't know how else to say it, man. Like AMD, like this was, I saw people in our chat going long, which is cool, right? But you don't have enough data off AMD. Like this looks decent now. I can get it now. I understand, and I would be comfortable with a long over 188.05. But like, there's just so many things that you see on Twitter that just infest your brain and have you feeling like you need to go long or you're a retard. Like Tesla, not a good fucking chart, dude. Like, yes, we caught the long from here to here, right? That's where we initially caught it, if I'm not wrong. I completely didn't trade this part here, or I had a couple contracts, nothing crazy. I'm not going to hype that up. Broke out. I closed a majority of my stuff around like what, 248, 250. So we caught a little bit of that with some small size. But dude, there are people like, you guys know who I'm talking about, like specifically, but like there's a lot of discords and people that are trying to convince you that these are incredible entries and these are incredible. Like, dude, you don't want to be trading like this, just buying previous day high after previous day high, and just, dude, it's not a recipe for success. I don't care what Flow says. I don't care what anybody says. Flow is wrong a lot of the times. It's a lot of hedge funds that are either like using like options as insurance and using their equity as their main position, or you just have people that are fucking desperate to make up for the losses that they had from the past year, 2 years. People using heavy size to get a 10% win. You guys don't know what these guys are doing. So play it smart. We have less money than these guys, right? We don't have fucking hundreds of millions of dollars or millions of dollars to put into positions and scalp. We have to be precise. We have to make sure that things align from a volume perspective, a bar perspective, a level perspective. There's so many different intricacies that go into how we have to trade. And that is what makes you successful. These other fucking guys can do whatever they want. They can get away with it, right? They can average down. They're not using their own money. This is our capital, guys. We got to be smart with this shit. So this was a huge, huge red flag for me kind of from the beginning of the week. I told you guys I was looking short. Sure, I took a couple stabs at things and they didn't work, right? I mean, I told you NVIDIA beginning of the week worked, right? I got like a good percentage gain on that. Intel, fantastic trade. I don't really know what else to say here. Accumulative signs here in terms of this range being bought up at the lows without a real break at the lows. So that volume has to be naturally, has to click in your brain that these are buys, right? And you can go back on the tape and review that. We were looking for an absorption of this gap high here, or yeah, the initial gap, I'm sorry, which we got. And then if we go to the hourly, which was back here, sorry guys, I usually don't do this in one take, so give me some props here. But we ended up having like a flag here after that absorption. What do? We gapped above, continued higher. We're going to sell here more than likely, and then we're going to make our way probably to fill this gap here. But that was a fantastic trade. Shop, this is kind of like a, I don't know the right word for this one. This is like a non-instant gratification thing. This is going to be a prolonged gratification, right? So, I mean, I kind of posted in the chat earlier, we have our 50 SMA, which is the blue line. The red lines are 21. The green line is our 9. Everything's kind of bundling up. We're kind of going through a reaccumulation at the top of the gap here, right? Which is, we've already talked about this, the volume. Is not matching the attempted wicks to break this underneath that gap, and that gap needs to be viewed as progression, right? These bears had a great move and they were able to kind of push this lower, and the fact that we're above that and they can't get back that progress that they made, and we're not seeing the volume that we need to see to push this back down to make a new low, makes it automatically that's a trade. That has to be a trade, and we have to be able to take this long and kind of stomach the fact that, hey, it's okay to let this pull back a little bit. Just take your ads against that 6420 spot, which is this gap here. We have protection, obviously, from the EMAs and MA fellows that like to use that shit. And, dude, I mean, this is kind of aligning for a big move here, and I'm okay with that one. But dude, those were the big trades, guys. Those were the big trades. I always post my P&L. I post about how well I'm doing. I post about how bad I'm doing, which a lot of people don't do. In trading, I talk about this all the time. It's fucking hard. It's exhausting. How you get away from that is focusing on the same criteria. I'm gonna beat a dead horse, guys. I'm gonna beat a dead horse because it's boring. Trading should be boring. It's fun when you're doing extremely well and charts go in your favor, but cheers. Yeah, I mean, it's not supposed to always be fun, right? And you're supposed to only wait for certain setups that you know you do well on, that you have statistical data that you do well on. I do the same stuff over and over again, guys. So it should be no secret by now. I mean, I'd still have some secrets I keep in the tank or the vault, but yeah, shop is prolonged gratification. I think this is going to do really well. Just to kind of go over this really quickly because I'm a little bit drunk now, but high should be made, and I think we're going to keep trading up to 75.3. This is probably my second favorite setup. Third favorite setup is Roku. We'll see how it does at this previous gap fill here. Technically, it's right here, right? But we'll just kind of use the wick high. We'll see how it does here. Volume has remained pretty stagnant, so I'm confident in this one. We'll just see how it does. It's the same thing as a shop. It needs to break over that high at 63.76 and continue a new high to move towards this gap here. Intel, a lot of people, kind of concerns me that a lot of people were like, oh, dude, this chart's dying. Guys. Harmonic breakout with volume here. What is the volume doing for the sell-off, right? decreasing. I know this is kind of a higher day than this previous bar, but this is also an inside bar, which is technically your rest candle. So it's kind of digesting the move that was made into the gap, right? Obviously, we expect sellers to kind of start and push from this gap. There's no way that this would have kept going, right? This is Intel. This isn't fucking Apple. This isn't Amazon. It's not crazy like that. So I expect profit takers. Just profit takers need to be mitigated as well as the sellers. Volume is very, very well mitigated here. It's pretty much in line with the rest candle or the inside bar from the gap fill day, right? So we're expecting a pullback, retest of not only the gap here. I'm not expecting the gap to give us much, right? This is the start of the gap at 32.82. We might see a bounce. I'm not going to add that. No matter how crazy or good that bounce looks on a 1 minute, a 5 minute. You guys shouldn't be trading on a 1 minute, by the way. Let's put that out there. But I expect this to push down, fill the gap, retest the previous breakout here, mark back up, right? Anybody that's smart is going to be buying again right here, especially if you missed Intel, right? Which a lot of people I'm sure did. This is the spot, okay? Re-add there, same contracts, the January ones. You can basically rerun the same level. We're milking things twice. Don't make that a meme. Don't make that a meme. But we're gonna milk things twice, dude. And then the thing is that's really nice about this is before we were taking our entries and risking here, right? So imagine we went long up here. Look at the drawdown that we would experience. That would be a 6% move if we ended up adding at the top there. Now, if we let this kind of come down, right? I mean, we can keep our risk as tight as we want. We can have a 0.23, 23-cent loss or stop loss if we want. Our risk becomes reset. Our risk becomes very, very apparent at that point. So, I mean, if we go long here, maybe give it like, I don't know, we'll give it like till this candle close or open right here, right? So 88 cents. And then we retarget back up here, the Stark bull print, or we can retest the top of the gap. Resets everything back to a 5R. It's that simple. Patience, understanding of chart structure, understanding of volume, price. I mean, this is the same stuff, dude. Like it really is that simple, and it takes a couple charts to be able to make your year. But yeah, I mean, I've shown you guys. I'm up 14K on the month. I'm gonna play it very, very safe. I'm okay taking stabs at shit because I don't care about losses because my wins will always offset my losses, and that's the name of the game, right? It's okay to take stabs at things. Hence Tesla. Once again, I'm gonna go back to this. I should have just fucking held this, dude. I should have held this. This is a 9R. This would have been 100 and I don't know. This would have already been 150, 130%, whatever you guys got that still have this trade. I'm very jealous of you guys. Also, I love you guys at the same time, but this has kind of become an extended video. This is 24 minutes of me nonstop talking while slightly buzzed, but I can do this because I understand chart. I don't need to be in the right frame of mind all the time to talk charts, to be passionate about charts. I always talk about this. If you're chasing the money when you're trading, it's not going to come to you. You have to love this. You have to have a passion for this. You guys have to like literally treat this as an art form because it really is, guys. This really is. It's a psychological art form. It's a technical analysis art form. There's a fundamental aspect that comes into this. Yeah, dude. It sounds so weird. I don't want to get cheesy, but you gotta fucking actually love this shit, and I do, and I just wanted to jump on here while I felt the passion and the fumes kind of coming off. Like I just wanted to talk to you guys. So that's gonna be it. Appreciate you guys. I'm gonna enjoy tomorrow. I'll let you guys know if I add anything, and see you guys next time.